Thank you for joining me. I'm Alexandra, and I want to talk about at&T today. I used to own at&T before I sold everything, and I would have been happy just holding it for pretty much ever. But the stats looked a lot better the last time I covered it. So what they do is phone servers, and they try to buy a lot of other companies as well. Long story, there are many companies, some of them sold again. It's difficult. Still, they're trying to diversify, which isn't necessarily a bad thing. I always thought that companies should try to diversify more. I don't think individuals should, but that's a whole different topic. Current price is $28.93, which gives them a market cap of $206 billion. Revenue $171.8 billion. Earnings negative $5.2 billion, which is not great necessarily, but it's mostly one-time charges. So it's not quite as bleak as this makes it seem. Current PE is 19 with a forward PE of 9. Obviously, a PE of 9 would be pretty decent. Dividend yield 7%, with a PE of 19, not great. With a PE of 9, that would be doable, with some room to grow as well. So current payout ratio is obviously just an estimate, negative 300%, which means out of the 5.2 billion that they lost, they paid 15 billion in dividends. Again, not great, but if the revenue goes back to not the 13 billion, they're still losing money on that, but the 18 billion they had before that, and I think there were over 23 before that. So if they can get back to that or a PE of 9, obviously that would be a decent payout ratio. Total assets $525 billion. Total liabilities $346 billion, which gives them a total stockholders' equity of $161 billion. So obviously, even if they lost $5 billion a year, they would be broke in 30 years. So not really a problem. Risk factors are Google trying to make their own network. I guess Starlink should be mentioned here as well. Obviously, Starlink is not the only company, SpaceX in this case, trying to do the same thing. Jeff Bezos with Blue Origin is also planning to just launch a satellite network, and since most phones these days use voice over IP anyway, or voice over LTE, everything's data-based either way. So just having data at this point is more than enough to have a cell phone network. So with that said, risk factors not only being other phone providers, but also internet providers doing, low orbit satellites. Low orbit satellites, more than good enough for speech anyway. So that's kind of all the risk factors there are. at&T owns, as you can see from the assets, a lot of towers and a lot of equipment, and that's going to be hard to rival for any newcomer. So beyond just people shooting satellites into orbit, I don't think there's a lot of risk factors for their core business anyway. So obviously, for a growth investor, revenue is shrinking, which isn't great. For a dividend investor, the dividend is amazing right now. If they can get to their forward PE of 9, I think that would be pretty amazing. I think it definitely warrants a deeper look at this company. For a value investor, the balance sheet is okay. It's not great. The forward PE is nice. Even the current PE is nice, although it's not calculated based off of the full year earnings, obviously. Still, a PE of 19 would be decent. Forward PE of 9, obviously great. Shrinking revenue, kind of a problem, but, with what a year 2020 has been, shrinking revenue in that year is not really that much of a problem as it is in other years. But Overall, I think that for a value investor, it also warrants a deeper look and kind of trying to figure out what the revenue could be, what the revenue should be, and where the earnings could be. So if they hit a forward PE of 9, definitely an interesting company. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.